G'day folks, welcome back to Pete's Investing. It's the 22nd of May 2024. This is the gold, silver, Bitcoin and US dollar update. We're looking at gold, silver and Bitcoin all taking a bit of a rise since our last update, and the US dollar has trended sideways. This is our heat map. You can see there in the center left console there. We've got gold, silver, the US dollar and Bitcoin all trending bullishly over the monthly CCI 150 period. On the weekly, gold and silver have been long, and the US dollar and Bitcoin are neutral, and there's a mixed bag there on the daily. So have a look at each of these, and also some other instruments for your consideration we cover in various other videos. In terms of our trading idea, I'll cover these in the video as well, but we look at the trend of the CCI 150 as well as some moving averages on the price, and we trade in the larger time frame trend. So if you're trading on the daily, for example, you make sure the weekly is trending in your direction. Or if you're trading on the intraday, like the 1 hour, for example, then you make sure the daily, at the very least, is trending in your direction. Second step is you trade in the direction of the CCI 150 and look for a fresh breakout from the CCI moving averages. And I'll go through some examples for you. And step 3, close the trade when the CCI 150 enters the CCI 150 moving averages. All those moving averages cross over. First, looking at gold on the monthly, weekly and daily, you can see there we're bullish on the monthly. The CCI 150 is trending above the moving average band. On the weekly, it's a fresh breakout on the weekly, so that's bullish as well. And on the daily, it's a breakout above the moving averages, although I just noticed the CCI 150 is trending down for the last couple of days of trade, showing a slight bearish movement. On the 1 hour and hourly, the 1 day and hourly chart, what I've got here is we're looking at the daily as a reference. So here, for example, I've got this bullish movement up here on the daily, so you would have taken long trades during that period. And what I've got here is I programmed some little indicators here, so you would have gone long. So going back to that day there, you would have gone long during that rise. And that would have been equivalent to that area there when it breaks above the moving average band on the CCI 150, but also the price. So you would have gone long at that point there, which correlated with on the hourly with that little break above the same periods on the moving averages of the CCI, as well as the break above on the moving averages on the price chart. These bands, by the way, these moving averages are in the code in the description below if you want to learn how to code those. They're just offset moving averages. So again, going long during that period, and that would have generated about 33 points to close it out when those moving averages cross over at that point, and another 41 points from there on, in line with that daily trend going up. You would have avoided going long during that period. And if I went back to, let's go back to this period, back in that 22nd of February. I don't go back that far enough, but you can see there during that period, going long at that point there, which corresponds to that break on the daily, you would have generated, let me just zoom in a bit. From that point back there, you would have generated about 143 points when it crossed back down on those moving averages. And that was that little rise in that area on the daily. So again, trading on the hourly time frame. Now notice here the CCI 150 is trending down, and you would have avoided going long during most of those periods. You might have, if you traded those little areas, you can see there small losses, -6 there and -15 there, -6 and -5. Then you would have generated a nice little break above at that point there. That would give you a 25 points gain. And again, avoiding the sideways movement until that point there when it breaks above, and that generated 62 points, and so on. You get the idea. 14 points there, 62 points there, and so on. Now, where we are at the moment, if I zoom in on the hourly, there's no divergence. We look at for any divergence. You can see there the CCI is trending in line with the price. We did have a bearish divergence back here, so always pay attention to those. So even though that gained, in accordance with our rules, the CCI breaks above the moving averages as well as the moving average of the price chart. That would have generated 33 points in that. Now after that, there was a small drop, a retrace, and it fell off according to this bearish divergence. So again, preferably trading with the moving averages, when crossover from the moving averages, in this case going long only. Next, we look at silver on the monthly. Bullish movement. You can see there, nice big bullish rise on the monthly on silver. On the weekly, likewise bullish, and on the daily bullish, although it's starting to turn down as well. in the last couple of days, and it's hit this resistance at 32.52. So just be careful about going long at the moment. Now on the daily, daily as a reference, along with the hourly chart, if you're trading the hourly chart, so you can see there during that period there, you would have gone long, where that broke above on the price chart as well as the CCI, and that corresponded with this point back here. You wait for this on the hourly, you wait for it to cross over on both the CCI and the price chart as well. You would have taken a long position at that point there, and that would have generated 129 points in that area there. And then rising further up from there, again, crossover on the CCI as well as the price, that generated 173 points. And currently, we're in a bit of a downtrend. The CCI is trending down. Hit this resistance, so avoid going long at this point. I'd be going short once the moving averages break below the moving average band. Next, look at the US dollar basket. You can see here on the monthly, we're little break above on the moving average of the CCI 150. That's bullish. On the weekly, we're neutral. It's within that band there, so it gives us a neutral signal. And on the daily, the US dollar is broken to the downside of the moving average band, and that's as a result of this double top on the price versus a slightly lower highs on the CCI 150, and that's fallen off quite substantially. And if I was to draw a Fibonacci retracement between that low, the recent low, to that high, we take the recent low before the divergence started. You can see there it's broken through the 50% retracement level and approaching the 61%. And that's a key area. If it drops much lower than that, that's going to be a reversal of the trend on the daily at least. It's more to the downside, and we may see that happening on the weekly as well. Now, on the daily and hourly charts, again, we've got currently we're showing a bearish signal on the daily chart, so start taking only short trades. So what I've got here is, again, these programmed arrows showing the short signals. So again, going short from, you can see there where that double top. So, and that equates to that double top on the daily. So if you're going short from that period there, that second point up there on the daily chart, on the hourly, that would have generated 75 points going short. That's in alignment with the price movement below the moving average band, as well as the CCI below the moving average band, and closing out the position when the moving average bands cross over. Do not take long trades, only short trades, so avoid going long during that period. That would have generated about 2 points, a small loss there, 52 points there, and again, it's going long, so avoid going short during this period. And even during that little period there, it's going pretty much sideways, going long, so you avoid it. I would have avoided, try and avoid going long or short during those sideways movement. Lastly, Bitcoin is bullish on the monthly. It's neutral on the weekly. It was bearish for a couple of weeks there, and then it's broken into the neutral positioning at the moment with a bit of an upswing. And on the daily as well, after being short for a number of weeks actually, on those daily candles, it's actually broken to the long side, so it's giving us a bullish signal on the daily. And again, going to the daily and the hourly charts. So again, we're looking at taking long trades only during this period. So I've got these little indicators showing going long only. So again, going long where the CCI breaks above the moving average band, as well as on that candle there where it broke above the moving average on the price. That equates around this area here. You would have taken a long position there. That generated, this is 3,053, because we're looking at, in terms of thousands, the actual price. And here you would have generated 436. Avoid going long. You probably would have avoided taking that trade because that CCI was showing you potentially a downswing, although the price kept going up. In this case, both the price and the CCI are downswing, so you avoid going long. And you avoid going short because the daily is still in a long positioning. And then once the CCI breaks above the moving averages and the price breaks above the moving averages as well, that would have generated 2,189 with that crossover, closing out your position. And currently taking no long or short positions on this one. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.